Today we're talking about trust fund taxes. We commonly call them payroll taxes, but I really want to talk about this because folks are getting in trouble, okay? But let me tell you how this came about. So I have a client who was getting caught up on some taxes they hadn't filed in a while, and they had some illness, whatever, blah blah blah. Anywho, they were doing due refunds, so we're not talking about dealing with any type of tax debt or anything like that. But he went to file the taxes, and then suddenly there was an issue where there previously were no issues. The taxpayer had the same employer and whatnot. But anyway, went to file his taxes, and then the IRS asked for a copy of the W-2. No problem. Okay, sent the W-2. And of course, they asked for more identifying information. All right, no problem. But then there was a problem. The problem was that his employer sold the business, but that current employer, before they sold the business, they didn't pay the taxes. Okay, so here is this man who was rightfully entitled to a refund of his taxes, but it became a problem because the business owner did not pay the trust fund taxes. And this is what happens all the time. So when business owners aren't paying these taxes, they're not looking at the second and third order of things, of like how this really works. So that's why I want to talk about it. This country, as much as we're talking about tax dollars and how money gets spent in this country, understand that this country is funded as of the fiscal year 2019. 50% of that is from the income tax, and 36% is from payroll tax, and the balance of that is from other stuff. But income tax and payroll tax are the two biggest funders of this country's budget. So this is what's going, paying everybody's salaries and roads and all of these things, okay? So when these taxes aren't paid, you really are taking money away from the government. And don't we know that the government does not like when people take their money, okay? So what's in trust fund taxes? So let's talk about it. So like I said, they're commonly called payroll taxes. So first is the income tax, right? Your income tax is impacted by your W-4. So when you fill out that W-4 and you're talking about if you have dependents, if you're married or whatever, then that is what impacts the amount of income tax that's withheld from your checks. Now, there is a new W-4 that came out in 2020 that's different from the previous W-4s. I see people still out here talking about this 2018 W-4, and let me show you how to income shift, and they know what to do with this, everything. The 2020 W-4 is not the same. They are just not the same. So if you haven't filled out a W-4 in a while, you're probably going to get the 2020 W-4. And again, it is not the same as 2018 because the 2020 W-4 is in line with the current tax code where previous versions were not, okay? So again, the first part is the income tax. The second part is the FICA tax. This is known as the Social Security and Medicare tax. Now, FICA stands for Federal Insurance Contribution Act. That is what funds these programs. Now, Social Security started being withheld in 1935, and Medicare started being withheld in 1965. Now, these are paid half and half by employee and employer, right? So 7.65% comes from the employer, 7.65% comes from the employee. That equals 15.3%. Anybody recognize that number? If you're self-employed, you do. That's that self-employment tax. So when you're paying that 15.3%, this is your Social Security and Medicare for my self-employed peeps, okay? And then the next part is the FUTA tax, okay? This is the federal unemployment tax, and that's paid by employers. So all of that makes up the trust fund, okay? The trust fund tax. Now, we're not talking about trust fund like you're a rich person and you set up this trust fund for your heirs and all of that. These are called trust fund taxes because you are being trusted as an employer. You are being trusted to take this money from your employees' checks and hand them over to the federal and state governments, okay? That's why it's called trust fund, because you as the employer have the added responsibility of withholding this money from these employees and then paying it over to the applicable governments. And so then when you don't, that causes a serious problem because, like I said, when these employees, like my client, go to file their taxes and claim a refund, and then the government is looking for, okay, where are these taxes supposed to be that you paid? Okay, yeah, you have a W-2, but we still don't have no tax money. Because see, be that, people can actually doctor a W-2, right, and claim fraudulent tax refunds. We've seen that happen all the time. And so then here's when somebody that's actually doing what they're supposed to do, but the employer hasn't done what they're supposed to do, that presents a problem. Okay? Because then, when these employees go to file their taxes and they're claiming a refund, or they may have a tax liability, but it's offset by what they believe they have already paid in. So if you, the employer, have not sent this money to the government, that presents a problem. And yeah, you can be held criminally liable. There's a difference between, being a month behind or something like that. But we're talking about if you're doing this over and over and over again, you can be held criminally liable. Okay, and you can go to jail for stealing money from the government. So now, as employers, the best thing that you can do for yourself is to make sure that your payroll money is separate from all of your other operating expenses. This is going to keep you from accidentally spending payroll tax money when you have no business. So keep that in a separate account. And employees, if you did not know, you can, first of all, get a Social Security statement every year, right? You can go to Social Security, I don't even know the Social Security's website, but you can get a statement every year that shows you if you retire at X date, this is how much money you can expect. And it will list every year how much you have in Social Security credits. And so if you've been working for a place and then you don't see any Social Security credits, that should lead you to question whether or not money has actually been going to the government. And now, if you have any role in the payroll process, listen, compliance is expensive and compliance costs. But understand, if you are anywhere in the payroll process, you can be held responsible when these taxes are not paid. So it's super important that you, regardless of where you are in that process, are making sure that these trust fund taxes are getting paid over to the government, because otherwise that's going to be ugly. Because, we'll talk about trust fund recovery penalties on another day, but just know that this is one of the most expensive penalties out there, and you can't write it off in bankruptcy either. Okay? So that's it. That's the deal about the trust fund taxes, you guys. Like I said, as employers, make sure you keep your payroll money separate from all other money. And for employees, making sure you're checking your Social Security statements to, make sure that stuff is showing up there. Because if it's not, then when you go to file for Social Security, if it's still there, and if you have no credits, then you're not going to get that Social Security money. So you got to make sure this stuff is being done. That's an extra step that you can take to really to look after yourself. Okay, so I hope that helps you out. Have a fantastic day, and I will see you all next time. Bye.